Joining me now on a green day on Wall Street, Diane King Hall is with me, taking a look at more names to watch here. NVIDIA's at 194.31, folks, so we're keeping an eye on that for you. And Diane has many other names that she's focusing on as well, including Western Dig. Good morning.
Yes, good morning, Nicole. Yeah, shares of Western Digital are rallying this morning. So it's not all about NVIDIA. You've got some broad participation. There is a tailwind for Western Digital from the analyst community. So essentially, we're seeing the memory rally gain more steam this morning. Its price target from Bank of America boosted to 197. That's up from 170. So it still has more room to run from here, where it's sitting with the gains today above $160 a share. The analyst has a buy rating. It is maintaining its buy rating, saying it's incrementally bullish after an investor meeting with the company's CFO. So it's feeling more positive about that. So even more positive than it was. Hence the big jump in its rating. I mean, again, before it had it at 170, all the way up to nearly $200 a share in terms of where they see the run rate for this. BofA believes hard disk drive demand will remain higher than supply. So the demand picture is solid for here. And they think that Western Digital's technology roadmap gives it the ability to deliver strong growth. So you can see investor positive reaction, thumbs up for this one. And keep in mind, Western Digital shares have already had a big run year to date, Nicole.
Yeah, I can't get over these numbers. I mean, I know that I always am looking, but just in the last few months, it surged even more, because if you look 3 months, it's 108%.
Yeah.
But if you look year to date, it's 255%. So
huge.
just even recently took another leg higher. Let's get to Palo Alto.
Yeah, Palo Alto, this is a tough one because they actually did do better than expected, but they announced another acquisition. So as we know, that can often ding shares, and it's certainly some of the pressure that we've seen today on Palo Alto. So adjusted EPS for Palo Alto coming in at 93 cents. The street was looking for 89 cents. So a clean, solid beat there. Revenue came in at $2.47 billion. Another beat. The street was looking for $2.36 billion. So Palo Alto is basically, I mean, when you have all these gains in the broad market, Palo Alto is the opposite of that, a poor performer in the S&P 500. So the results were strong, but clearly not spectacular enough to excite investors, especially in this week where we have renewed optimism around NVIDIA. Guidance came in essentially in line, maybe a little bit better than expected. So, still, again, not strong enough to receive a positive response. Now, this also may be a tricky point here. CapEx jumped to $84 million versus what was expected. The street was looking for $58 million. So there is heavy investment here. And unlike other companies where investors are willing to show grace, they're not willing to show that same grace with Palo Alto here. They did announce this big acquisition, more than $3.3 billion acquisition of Chronosphere. Palo Alto leaning into, we want to be a one-stop shop. You'll recall they had made another acquisition, CyberArk, and there were questions about how that's being integrated, but now they've announced this other acquisition. It's an acquisition spree here, and investors just seem to not have patience with this right now, Nicole.
And investors and consumers are not shopping at Bath & Body Works.
I know, this is what I grew up with. I'm like, what happened to Bath & Body Works? So they, performed worse than expected on both the top and bottom line. Adjusted EPS came in at 35 cents. The street was looking for 40 cents. Revenue came in at $1.59 billion. The street was looking for $1.63 billion. So weakness across the board. Guidance is slashed here. Bath & Body Works shares down more than 20% today. Consumers just aren't buying, the things that they used to buy at Bath & Body Works. I mean, this was a mall staple, but also consumers don't go to the mall like they used to. So that's one of the challenges here. Bath & Body Works say they're trying to do this back to basics, consumer first formula, focusing on body care, home fragrance, soaps and sanitizers. It's an old playbook. I don't know if it will work, Nicole.
What's interesting is we heard from Home Depot, Target, TJX, Bath & Body Works worries about the consumer. Walmart is a grocer. People go to groceries, but they've been working so hard on personal care, apparel, apparel, and they're seeing people coming in and buying that. So, are people going there and buying things for themselves instead of Bath and Body Works? What's happening
That's a good
here?
question.
But hitting a new low today. It's at 15 and change. Thank you, Diane
All right,
King
you
Hall.
got it.
Great to see you always. Appreciate it.